We've got my friend Amanda Lewin. She's the founder and the CEO of Bamboo Detroit. It's a co-working space, and she's a fellow Spartan. And we've got Tapan Kataria here. He's a venture capitalist, and he's with Techstars and Backstage. He's also a Spartan. And then we've got Marc Hudson. He's the founder and CEO of Rocket Fiber. They sold last year to Everstream, or this year, I can't remember when the deal closed. And actually, Tops is good friends with him. So we've got my son Colin here too. We're having a little lunch. And I'm gonna turn it over to Tops. Tops is good friends with Marc, and Tops is gonna intro Marc.
Yeah. Hello everyone. Hope you all doing good. Staying safe out there. Marc is an amazing friend, mentor. I think I met him about 2 years ago at a happy hour that Amanda hosted at Bamboo, and we became good friends after that. I was thinking about like a lot of memories to share here, but then I realized there's so many, or the ones that are good, I can't share. So, honestly, like every time I need anything, Marc is like the first person I go to. He's wealth of knowledge, and I promise you guys will gain a lot out of this workshop. So definitely, get your questions ready, ask him a lot of questions, I'll let Amanda take it from here. And I know that she's a little bit closer to Marc than I am. And by the way, congratulations on a recent exit. And that was about 2 weeks ago, not last year. So it's a big congratulations.
It was about like 2 weeks ago. Can you guys hear me? It sounds a little echoey.
Yeah, someone's got to turn their speaker down. Probably you, Amanda.
Okay.
There you go.
Okay. It still sounds echoey, but hopefully you guys can hear me. I know 2 weeks ago feels like 2 years ago in COVID time. But Marc also mentors and advises a lot of startups. He raised venture capital on his own and grew Rocket Fiber to 75 people, profitable infrastructure company. And I know he'll have some good resources for everybody today.
Cool. So Marc, we asked you what topic you wanted to talk about, and you wanted to talk about financial tactics to stay in business. And I mean, what a time to be a founder right now. Starting a company is so hard, and then to throw COVID on top of it. I, as an angel investor, I've paused activity while I, try to assess the financial carnage that's happening in my life. And I'm so glad that I'm not a business owner right now, faced with the financial carnage, the family pressures, the self-isolation, having employees to deal with. And I think the key is to surviving through this thing and not going out of business during it. And so I'm hoping that you can share with the audience what your tips to stay in business, throughout this crisis.
Yeah, absolutely. And guys, thanks for having me today. It's a topic I feel very passionately about, especially given the environment that we're all operating under today. And so just really quick though, before I get started, I wanted to share with you guys a quote that I feel very strongly about, and hopefully speaks to a little bit about what we're talking about today. And that quote is, learn from the mistakes of others. You can't live long enough to make them all yourself. So I love that quote because it's a quote about learning, and learning from the experiences of others, and our collective experiences, rather than making all the mistakes firsthand. Firsthand experience is great, but it's a very expensive and painful teacher. And so with that, what I wanted to kind of go over are a bunch of kind of different tools for the group to think about as we all navigate the financial uncertainty that has been brought upon by COVID-19, whether with your business or even personally to some extent. So a lot of these principles apply to both. And so we'll just start with the basic philosophy here. So the philosophy is you are a CEO, whether in your personal life or of your business, or maybe both. But in either world, cash management is your number one job. There are a lot of things you do in a business, either as an employee or an operator or founder of a business. But if you're in the founder seat, the owner's seat, cash management is your number one job, period, end of story. There's no question, no debate there. You can't do anything in business without cash. In fact, your business will cease to exist without it. So you can't do all the amazing work, change the world, bring your art to the masses if you don't have cash in the bank. So just starting from that foundational point that cash is king. So how do we manage cash in a time of crisis? Well, there's really three levers that I think about that we can kind of pull to manage cash. And those are revenue, those are expenses, and finally credit. And so all of them turn into cash inflows and outflows and create what we call runway. So runway is how long can we stay in business in days, weeks, months, years under kind of our current run rate. And then also how is our runway impacted by things like COVID-19 and essentially, potentially the decrease in revenue or the decrease in expenses that we can take charge of. So I want to start with revenue. So let's talk about the thing that pretty much everyone out there, I haven't talked to anyone to date that isn't impacted on the revenue side by COVID-19. Some businesses like restaurants may have been impacted up to 100% of their revenues. 90 to 100% of their revenues have effectively gone to zero because of this thing. Other businesses, 30, 40, 50%, depending on what your line of work is. But I have not heard of anyone that hasn't been affected. So I'm seeing some things out there, talking to different folks. Number one, starting with pivoting your services. How can you add a different product or a spin on your product, maybe take something online or digitally that adds value in other ways? This is a great example of what we're doing right now. Bamboo, being a community-based organization, trying to continue to add value to its members. How can you do something that might be outside your normal product set or value add to continue adding value to your customers during this time? Another thing is pricing strategy. So I talked about cash. Cash is so important right now more than ever. A lot of us, it's been a long time since we've been in a down economy. 08, 09, I know we had a little bit of a setback in 2015, 2016, but really going back to 07, 08, 09, cash in the bank is super crucial right now. So think about your pricing strategy. What are you charging for your services? How can you potentially discount those services to get cash in the bank today? We don't know what it's gonna be like in 3 to 6 months from now. It could be considerably worse than it is today, or we could be through the bulk of this storm, but we must assume the worst. So cash in the bank. So as an example of pricing strategy is, what if you sold a bundle of your services, say 3 months of services for 2 months of pricing, with the caveat that the cash must be paid today? Get the cash in the bank. That is one of the biggest recommendations or biggest takeaways that I would ask for all of you to have. Oh, can everyone hear?
Yep.
Is everyone good? Give me a thumbs up. Okay, a couple of people having trouble hearing. I just want to make sure we're still good. So think about your pricing strategy and how you can pull those revenues forward to get money in the bank. Another one is your accounts receivable. So think about services that you've already rendered. Who owes you money? And what are you doing to collect it? Now, unfortunately, we're in a time where everyone is counting every penny, looking at cash outflows, the different vendors that they're paying. So if you've already performed a service and somebody owes you money, I would really encourage you to be pleasurably persistent in the collection of that money. Everybody, Rocket Fiber, any business out there is looking really hard at cash outflows right now. What vendors can potentially be paid a little bit slower than others to protect the cash that we have in the bank today? So, from my personal viewpoint, we're paying the vendors that are being the most aggressive and the most persistent in asking for payment. So make sure that you're talking to your customers, that you're not just assuming that you're going to get paid, because right now everybody has a cash crunch. Everyone's trying to do their part, but don't assume that if you're not being proactive that you're going to get paid. So be pleasurably persistent, be proactive, go get your money. Now let's talk about expenses. This is probably the biggest piece of the equation that you can control. Obviously, you can't control necessarily where the market is and revenues and being able to get new customers. You're going to go out there and try and do that. But expenses is something we definitely have more direct control over. So I would encourage everyone, create a list of all your expenses. Be exhaustive. every single line item that you're spending money on. You should already have that, but if you don't, make that list. Now arrange them in the order of easiest to hardest to turn off, reduce, pause, or delay. Be very honest. It's a hard conversation. You probably think most things you're spending money on are essential today in your business, but have that hard conversation. Picture yourself 6 months down the road. You didn't make the right decisions. This thing didn't get any easier. You've run out of cash and you've had to close the business. Now, what is the true order of operations here? What are the things that you can pause, reduce, delay starting today, assuming that this thing isn't going to get any better? Build a matrix of scenarios. So once you have your list of items 1 through 50, build a matrix of scenarios 3, 6, and 12 months. So assume that this COVID-19 crisis will go on for 3, 6, or 12 months. Now, layer in the different scenarios of when and how you turn your expenses off and how much runway that gives you. Your ultimate goal with this matrix is to get to 12 months. Assume worst case scenario. Assume we're going to be in the thick of this thing for a year. Now, I don't have any inside knowledge that suggests that we're going to continue in a hardship cycle for another 12 months. But as business owners and operators, it is our job to plan for the worst case scenario, to manage cash, and to steer our business through the storm. So build that matrix 3, 6, and 12 months and say, look, scenario A, I reduce revenue by 20%. Scenario B, it's 30%. And scenario C, it's 40%. Now, how do I pull the levers on the expense side to make sure I've got enough runway to get 3, 6, and 12 months? Now, on a monthly basis or even a bi-weekly basis, you need to create waypoints. You need to say, I need a minimum of X amount of dollars in the bank. If I do not cross, or if I go below this threshold, my minimum cash reserve, when I check in at my waypoint, then I need to reduce expenses. I need to make sure that I'm out in front and being proactive, that I'm not going to run out of cash. So I would encourage you to create a regular cadence check-in point where you're counting cash in the bank, saying, if I go beyond this point, it automatically results in this action being taken, this expense being eliminated, reduced, paused, etc. Whatever you need to do there to keep the ship afloat. Now, conversely, I'm going to challenge us as a community to think about what we can continue to support. I know there are things within our business at Rocket Fiber that we absolutely can continue to support during these times. There are expenses for other at-risk businesses that I know I could turn off right now. I don't absolutely need them, but I know that would be absolutely devastating to that vendor that I have a relationship with. So therefore, because we have the means, we are not turning those vendors off. We are not pausing them. We know we are a big spend, and we're going to support them much in the same way they've supported us during all these times. And just building on that, I would say if you have any reciprocal relationships, meaning people that you spend money with and they spend money with you, you need to take a very hard look at those relationships before you're turning them off or pausing them. It would be really foolish to cut a $200 a month bill when that person is then turning around and spending $500 a month with you, because you're sending them an indication saying, you might as well just turn me off on your end too. And that's a net effect of negative $300. So just be very careful when you're thinking about what expenses you're turning off. Okay, so let's talk about the third mechanism, and that's credit. So our ability to borrow during these times is more important than ever. So for those of you that have a business out there, you might have a line of credit, a credit card, something that you use for working capital in the business. I would encourage you to go to your bank, go to your lender, and talk about extending that now. We're in the early innings of this thing. Banks are still being great partners from everyone that I'm talking to where they can. In 07, 08, when banks fell on hard times, when they did not have the ability to lend, things dried up quickly. We're not there yet. We could be there in 3 to 6 months. So I got a question here. Would you borrow first to reserve cash in the bank? Absolutely, Jay. So that's what we call an offensive drawdown. So if you have a line of credit, I would seriously consider right now, and I talked to a banker friend last week about this, drawing down on that line of credit. Your interest rate on a line of credit is probably somewhere between 4 and 8% on an annualized basis, it's not a huge interest rate. It is worth it, in my opinion, right now to draw down on that line of credit, secure the cash in the bank, versus you end up in an 07, 08 scenario where businesses had lines of credit. Legally, they were entitled to them. There was no way the bank, under any legal circumstance, could pull that line of credit from the business, but they did, because they just simply didn't have the funds to lend. So rather than be the last guy in the line waiting to get your funds on that line of credit, I would recommend doing some type of offensive drawdown to make sure you have a minimum cash reserve if you can do it. Additionally, and I'm not going to go into detail here, but the SBA, as part of the government stimulus package, is now rolling out a couple different loan programs that, my understanding, what I've heard, I got it copied on an email from a CPA that said that the SBA small business loan packages that are coming out not only are intended to be used for at-risk businesses for working capital, but that they actually may be forgiven as grants as part of this ongoing relief program from the government. So I think the SBA is going to be doing a lot here. There's a bunch of different programs that are out. I'm not an expert, haven't had time to get smart on them yet, but I'd say that should be something else where you're getting in line early, being proactive on, even if you don't think you need the cash today. An SBA loan, interest rates are incredibly low. Worst case scenario, you pay a little bit interest on it. You have cash in the bank for 6 months. Can you guys go on mute? I think we're getting a little bit of an echo here. There we go. Thank you. And similarly to the offensive drawdown on the line of credit, go get the cash in the bank. Worst case scenario, you pay a little bit of interest. In 6 months, you pay the loan back. Okay, so that's credit. Let's talk about one tangential item that I think is really important to cover as well. That's assets. So let's talk about protecting your assets. So this could be equipment in your business. That could be real estate. This could be savings. These could be investments. All types of assets. So I would say, while we're all in this slowdown, everyone's working from home, now is a great time to review your insurance policies, especially for your business. Make sure you have coverage for any type of crisis or scenario that could come out of this COVID-19 shutdown. I read an article yesterday talking about are employers potentially liable if one of their employees catches COVID-19 while on the job? There's a lot of different opinions out there. So I would say get in touch with your insurance provider, make sure your coverage is good, it's sound, it's intact, and that you've just done a good checkup there. If you own real estate, commercial or residential, applies to both. You need to be proactive in talking to your lender if you think you cannot make payments either now or in the near-term future, or can only make partial payments. There are programs available for both commercial and residential, typically, but they all require you to be proactive. Just simply not making payments is not an option. You have to talk to your lender. You have to talk to your landlord. You need to make sure that you're being 100% proactive. They appreciate that communication. In some cases, it's required in order to get any kind of relief there. So proactiveness is kind of the theme overall here, but make sure, especially on the real estate side, that you're being proactive. Okay, this last one, huge disclaimer here. I am not a financial planner. I am simply sharing with you my playbook, the thing that I've done that I believe to be true here, but this is your 401k. So let's talk about the stock market. So stocks are equity, right? So they're investments in companies that are high risk, high reward. We've been in a bull market for almost a decade now. That's the high reward piece. Now with COVID-19, we're in the high risk piece where companies are getting crushed. Revenues are drying up. The stock market was down as much as 35, almost 40% 8 or 9 days ago. We had a big kind of surge last week. We had a record kind of rebound due to the stimulus package. It is my opinion that was incredibly temporary, that we are going to see further impact in the stock market. So while we were down about 35 to 40%, now we're down 20-ish% year to date. I think, again, just my opinion, that when Q1 earnings start rolling in middle of April to the end of April, we're going to see just a further crushing in the stock market. So what I did is I took my 401k, most 401ks, or if you're not in a 401k and you're just using, Robinhood or something else like that for stocks, you can pull your money out of stocks and move them into something that is much more resistant to an economic downturn, and that is bonds. Any debt instrument that is lower risk, lower return, but it's a good way to insulate you personally through the downturn that we're going through right now. My objective right now, okay, I missed the boat. I didn't pull the stocks out in February like I could have if I was really paying attention to what was going on, or I had inside knowledge like some of our politicians. Not going to touch that. But now that we've had this temporary bump, I said, hey, now it's a good time. We've seen some recovery, pulling my money out of the stock market, putting it into bonds, waiting until we get through the storm, and then I'll be back in the stocks when I think it's safe, which could be Q2, Q3, Q4. Really don't know. Going to wait until I see some good long-term indications that we're on our way to recovery, that COVID-19 is in the rearview mirror. So with that, that's all my tips. That's all my wisdom. A lot of that shared, coming through firsthand experience via making my own mistakes. So hopefully you guys learned something from it. I think now, David, Tops, Amanda, I think we're going to open it up to questions.
Yeah, before we hop into the questions, I think Amanda, you got a shout out for a startup here.
Yeah, I think Gustavo is on the line, and we want to shout out his company Fluxo, Fluxo. I will drop a link in the chat. It's an easy to use tool that's launched here in Detroit so that small businesses can financially forecast and plan. So better than Excel, way easier to use. Super great resource here locally. And Gustavo's been super great and hands-on in helping people with their forecasts. So that's definitely a great resource and a local startup we wanted to shout out. I'll drop a link here in the chat for everybody.
Thank you, Amanda there. Okay, so let's get to your questions and answers. So get them fired up. And if you put them in the chat, I'll move them into the question bank, and then we'll pretty much answer them in the order they're received. Or you can also upvote if you want to make sure your question gets upvoted. So, Mark, we've got a question from CJ here in Lansing. What does a worst-case scenario look like for startup businesses that got halted right on their launch, financially? So they just started, and then, this COVID thing hit. What does a worst-case scenario look like for those kind of businesses?
Yeah, worst case scenario is you're out of business, right? So that's where going back to cash management is so key right now, that we're taking a long-term view more than ever on COVID-19 and really looking at this from, I said 3, 6, even 12 month. I would really be taking a 12-month lens on this, that this is the time to be conservative. On that note, Amanda, I forgot to mention Bamboo and through the network here, I've gotten a link to a resource from Sequoia Capital that is the matrix that I was kind of referencing. So I don't know if we could post that in the chat, but it's a really good template to get you thinking.
We did last time, so we'll repost it here too.
Perfect. To have you thinking critically about how you plan for all the potential impact of COVID-19. But look, if it's me and I'm building a startup right now and I've got to make choices about deploying capital, I'm sitting back and really, really thinking hard about, am I spending money, or am I going to sit on that cash if I have cash in the bank and kind of bide my time here while we get through this? I'm very hopeful that, we'll be out of this thing in 6 to 12 months as, the government gets a handle on testing and we get a vaccine out there, hopefully. But in the meantime, thinking that this is a 30 or 60-day thing, while it could be, I think is a not conservative enough approach to maintaining cash and therefore your business.
From my perspective, I was in the process of starting a business right as this hit, and I wanted to help startup founders raise money. And I took a look at the environment and thought this was a bad time for me to go out and be asking customers to spend new money, and for me to put the resources into launching a business versus hunkering down, cutting expenses, delaying payments, those kinds of things. And I feel like if my business wasn't benefiting from the COVID disaster, that I would really want to pause if I was at that early stage. I think I'd view it almost like a blessing, just like hit pause and not spend resources right now in this environment and save it for later. Okay, we got a question from Amanda, one of our hosts. How do you recommend having those harder conversations with lenders if you can't pay?
Yeah, this is you know, there's not an easy answer here, but I'd say this goes back to being proactive. One, lenders really appreciate if you reach out to them versus you just start missing payments. One of the things that you can offer is to move to an interest-only payment schedule. So you're not paying principal, you're just paying the interest on the loan. That is something that some lenders are willing to offer and able to offer, especially now that we're still in the early innings. So I think it's about going out there, securing kind of an amended payment schedule or plan where you're reducing, you know, maybe not paying on principal and just on the interest, but you're reducing your cash outflows. If you wait 3 months, 4 months, 5 months, and the banks end up in a cash crunch like we did in 07, 08, 09, that may no longer be an option. And you may just end up in default of your loan and end up in you know, some type of legal action with your lender. So be proactive. You know, be honest and let them know that, you know, if you can still make a partial payment, even if it's just on the interest. I think that's something that a lot of lenders would be understanding or amenable to during this time of hardship.
For me, I haven't had a hard time having hard conversations with lenders. I called up the banks, and I didn't have personal relationships with these companies, and they're big banks like Chase and Lightstream and things like that. And on their customer service, you know, I asked if they had programs to help with COVID, or if they'd emailed me and said they had programs to help with COVID. They explained the programs to me, my options, how they worked. And then we took it from there, and it was unsuccessful in most cases. In one case, they are deferring payments to the end of the loan. And then with a credit union here in town, Michigan State Federal Credit Union, they give me a whole bunch of options of things I can do, and I haven't acted on any of those yet, but I wanted to know my options to see how I could handle things.
So it sounds like a lot of people have steps in place. You just need to ask about it and open up the conversation.
That's how I felt about it. And the programs are changing. So I just saw either this morning or yesterday that I think there are some new mortgage laws enacted where I can't remember if it's up to a year, maybe, that the government's requiring some mortgage lenders to give special treatment. And so it's changing really rapidly. And when I called my mortgage company 2 or 3 weeks ago, they said they didn't have anything for me at that time, but to check back in like 5 days.
Yeah, David, just kind of an important, I think, comment. I think as founders, entrepreneurs, we often have a hard time distancing ourselves, or at least drawing a line between ourselves and our business. So I would encourage everyone to really think about what's going on with your business and then what's going on with you personally, financially. At some point, if your business is in peril, or maybe, you know, there's really no good way to kind of get through this thing, you have to think about how you shut that down and don't ruin your personal financial situation as a result. Some people, they're so emotionally invested in their business that they will empty their savings, empty their 401k, stop paying their mortgage just to keep the business afloat. And I think you've really got to take a hard look in the mirror and say, at some point, I got to take care of myself personally before I can do anything with my business. So that's just something to keep in mind, so that, you know, if things really go south, it may be what it may be with the business. You can always close the business down, but don't ruin yourself in the process.
Yeah, I like that. Okay, next question from Tops, one of our hosts. What big opportunities exist for startups born out of this COVID situation? Is there anything that comes to mind, Mark? Any big opportunities you're seeing right now?
Oh, it's a hard question. Yeah, I just think about going back to like how you think about new ways to add value. Think about the tens, if not hundreds of millions of people that are now working from home every single day. in a very different environment than they're used to. I don't have a great answer to how to do that, other than, we talked through Bamboo. How do we deliver content right to your desktop, and be a value add in that respect? So I think for each business it's different, but I think you really have to step back and remove yourself from the normal, kind of paradigm that your business was operating under before, and understand that we're in a completely new world right now, a challenging world, but one that definitely has opportunities. But we got to go find them.
Andy over in the comments has a great suggestion. He said ways that people can value their relationships more online, and that there's big opportunities to create relationships there. I think that's what you were saying, Andy.
Along the opportunities side of things, I think a good friend of mine here on the chat, Julie, she told me and really drilled it into my head, if it's not COVID right now, it doesn't matter. And I thought about that after she said it, and I was thinking about in my own life, if I get an email or, what's happening with me right now, and she was right on. If it's not related to COVID, if it's not related to my financial stress and what's going on in my life today, which is dominated by COVID, I'm not exploring it. And I think that's been helpful for me to keep in mind that if it's not COVID related right now, people are going to have a hard time paying attention. Okay.
I just want to add one thing. I think Andy couldn't be more right with that. I was thinking about this the other day. We're all social creatures, whether you're an introvert or extrovert, we all need social interaction. And I think now more than ever is an opportunity for you to work through social networks to get to people, whether it's, advisors, mentors, investors, or on the other side with customers. You can build relationships with less noise right now than you've probably ever been able to before. And so I think, going out there and scheduling those calls. And I'd encourage, I actually had a team member tell me the other day about a remote company or a company that's completely decentralized. And every single call that company does, they require video chat because it adds an element of interaction that you don't get over the phone. And it also, it makes you as a person, you got to get up and shower. Yeah, you got to look presentable. You got to look halfway decent. So you maintain that kind of professional feeling within the home, which I think does something to us psychologically as well. So love Andy's idea there.
Yeah, I think that's a funny point, Mark, about showering. I can get into the habit of, not showering unless I'm going out, and these video Zooms are keeping me honest. Everybody wants to see me on the Zoom, and I got to change my shirt every day and shower. And
I really like what CJ added here. Social wealth is more than economic wealth. I think that depends on the case and the situation, but your network now is more valuable.
Yeah, I found that this has been a good time for me to build relationships, like you're saying, Mark, scheduling those calls. Well, not even scheduling calls, actually, sometimes just calling somebody. And I've been surprised at how they've been responsive. And at first, they expect there's an emergency. And they're like, hey, Dave, what's up? And I'm like, oh, yeah, I'm just calling to check in on you. And they're kind of taken aback, like, oh, yeah. And then we have a genuine conversation, and we're building something. I'm not asking them for anything, and just asking about their family and to see how they're doing. And I think that they appreciate those calls. Okay, the next one we got here from Will. He says, what are some creative ways a founder can bootstrap their business during the time, given that raising VC in the near time is next to impossible at this stage? Or what are some creative ways that founders you've come across invested in bootstrap before they took outside funding?
Well, maybe it may not be the exact question you're asking, but I'll launch into a little narrative here. I think a lot of early stage and first and even second time founders fall into a trap of thinking that capital raise is the solution to the problem. And unless you're building a product or something that requires a large upfront capital investment, you typically, if you're being super honest with yourself, can go out and get some level of revenue without spending or investing a ton of money. There are a lot of businesses that could evolve and turn into a technology, an app, a web platform, something else that can be run out of a spreadsheet. They can be run out of a Squarespace website with a Zapier automation to build all of that. So now more than ever, I think the eye has got to be on how you generate revenue with as minimal investment as possible. And that's just good startup practice in general, in my opinion, because everyone wants to believe they've got a great idea. But until you go out and talk to 100 people and use, and it almost pains me to say this, but like the academic method of research to really understand the problem and solicit a statistically relevant sample size, it's very, very hard to believe that you actually are onto something until you do that. And I actually was just reading a book today, which it wasn't necessarily about startups, but it gave an interesting point, which is, most scientific studies try to prove something's true. And it's this concept of what's called falsifiability, which is just as important is, can you prove something is false? And if you can't, then that lends more ammo to the fact that something is true. So sorry to pontificate for a second, but I think it's really about, being a super disciplined startup founder, which is going out, proving that you have something that adds value and selling it. There's the term minimum viable product. I heard a term minimum sellable product, which I like even more, which is how can you build something as lightweight as possible that brings cash in the door. And then once you do that, how do you scale? How do you do a whole bunch more of it? This is Detroit. We always like to say we're good at we should be good at the assembly line, right? So we have the assembly line for cars. I always like to point out, and then we have the assembly line for pizza. We're the largest pizza state in the country. We make hot and readies. We make Domino's pizzas. We're really good at making these highly scalable, repeatable things. And that's how we need to be thinking as startup founders.
I like that, Mark. I like that minimum sellable product, getting that cash in. And then I liked what you said earlier in your opening, where you talked about pivoting the service. If I was a startup founder, I'd be really scratching my head and trying to think, how can I wrangle my service in to be COVID related to get people interested in it right now?
Yeah, or even thinking about how your service, you don't need to, necessarily create and sell a white paper on treating the symptoms of COVID-19, but you might think about how your business alleviates a pain point that's somewhere created in the supply chain or disrupted in the supply chain by COVID-19.
Okay, next question here from Jay. Has it been necessary for Rocket Fiber to develop a plan for delivering services products with a minimum staff, thus having another way to reduce expenses and prolong operations?
Yeah, so I'll tell you guys high level just what we've done. The good news for us is most people need internet, and even more so now than ever. We have worked really hard, especially with the small business community, to pause billing and really alleviate billing for a lot of our retail customers, so restaurants, really anyone that's just in a totally bad place right now. So we haven't taken. And the good news is that while we have a lot of those customers, their monthly bills are relatively small, so it hasn't impacted us hugely from a revenue perspective. We've also, I'd say unfortunately, but I'm proud that we've done this, is we have shut down anything that does not follow the executive order to a T. And I want to be clear with folks, because we've done a lot of homework here. The executive order that was issued by Governor Whitmer says that unless you are providing a service that sustains or protects life, and you fall into one of these mission critical sectors, not or, and, you shouldn't be physically operating in person at all. And there's one other exception that says if you're doing something with HR, payroll, or helping your team members work remotely, that's fine too. There are so many companies out there right now that are still operating, that still are claiming, well, we're an essential service, or we fall into one of these categories, and it's complete BS. Those people are hurting the broader economy. They're putting people at risk because they're not doing, the thing that the governor ordered. And frankly, I think it's just common sense at this point. So Rocket Fiber shut down more than 2 weeks ago. We actually shut down ahead of the EO. We went full work from home. 2 weeks ago, we were still doing installations. So we put a bunch of protocols in place, including, health questionnaires for our customers. But then when the EO came out, we actually shut down completely. So we said no installs, no trouble jobs, unless it is for a service that sustains or protects life. And that means we actually are foregoing revenue opportunities because of it. So we have customers waiting to be installed, both residential and commercial, where we've said we're going to do our part. We're not going to be one of the people that's out there still going into work for no reason and helping to spread this thing, because that just exacerbates the problem and is going to make this cloud stick around longer. And so that's really where we're at right now. Minimum staff, all work from home. And the only reason we're going in is, like a hospital or somebody like that needs help. Other than that, we're shut down.
And Mark, when you talk about being strapped for cash and you're going to banks and saying, hey, can I pay you later, and cutting expenses, I was really surprised to hear you talk about pausing bills for customers that are struggling. How are you thinking about that? Is it they don't pay at all, or is it they don't pay now and they're going to pay later? How's that? Or you have to figure it out later? And what's your advice to, I guess more importantly, what's your advice to people, how they should think about that, founders out there?
Yeah, so we're taking it on a case-by-case, relationship-by-relationship basis. For the retail customers that we know, like there is no recovery, right? The revenue they lose right now is not recoverable. They're not going to just open in 6 months and all of a sudden have double the revenue in October than they normally would. It's just not going to be the case. So for those customers, we're foregoing it. They have low operating margins anyway. So our goal is to be a good partner, keep them in business, and bank on the longevity of that relationship, rather than being somebody that helped put them out of business by trying to collect on the debt. And because, I mentioned before, we're in a position where we can do that. So we're trying to, do our part to lessen the blow for the community. There are other customers that may be bigger where we're doing more of a forbearance strategy, which is, look, hey, you don't pay us today. You're still incurring the cost. You're still using the service. And we're going to spread that out, kind of amortize it over the remainder of your contract. So really, it's tough because we have to protect ourselves too. If we were not in the position that we were in, then we'd probably be a little bit more aggressive here. But going back to cash is king, and you got to maintain that. But if you're in a position to do that, just trying to do our part.
Yeah, that's awesome. We've got a question from Gustavo here. How do you talk to your team about the company's finances? Is there a way to do it without adding one more source of stress to their minds?
Yeah, I think, like every startup, transparency is really, really important. We found at Rocket Fiber that if we weren't being proactive in talking about our finances, the rumor mill was constantly going. There was, in our early days, there were rumors that we were going out of business, that we were being sold for parts, et cetera, when we had millions of dollars in the bank based on our fundraising activity. So I think transparency is really important. It builds trust. I found that people actually handle it pretty well, meaning that you worry that you're gonna scare your folks. They're gonna be frightened. I think most people are mature, they're thoughtful, and they handle these things very well. That being said, if the transparency is, hey, we're running out of cash in 14 days, we're not going to make payroll, and I've got no plan, then yeah, that's going to cause a lot of anxiety, a lot of issues. But it's about being able to communicate. Here's the plan. Here's what we're going to do. If we get to this point, we're going to pull this lever. If we get to the next point, we're going to pull the following lever. And just having that road mapped out. So one, it's doing it for yourself so you can operate the business correctly. And then two, how you can alleviate the concern of your team members that may just think we're flying blind here, we're going to run out of money, and the sky is falling.
So come to them and say, hey, here's the problem, and here's kind of the plan over time, and here are the things that we can enact to get through this.
Yeah, absolutely. And look, if we need to, if worse comes to worse, we're gonna shut this thing down. We're gonna stop paying. We're gonna reduce our salaries. We're paying ourselves by 50%, but it's not a total reduction, or maybe it is a total reduction, and maybe it's an honest conversation that we need to start doing freelance work to support the core product development in the meantime. But there's got to be a path there, and it can't be wait till we get to zero and then pull the e-brake. It needs to be a thoughtful plan that when we cross, there's only $3,000 left in the bank, then we're going to start soliciting client work so that by the time we sell our first account, we'll have cash coming back in the door to keep the runway in front of us.
I like that. Okay, next up we've got Jay. So you mentioned figuring out new ways to do business. With much of the population and possibly my market segment being housebound, would now be a good time to launch a web-based business?
Yeah, I think the short answer is yes. I think it's nuanced based on what you want to do. There's a really good article. I'll see if I can dig it up. That talks about how many great unicorn type startups came out of the 07, 08, 09 recession. When times are lean, it forces us to be open and honest with ourselves and build things that add real value. And the companies that I think that can survive now and thrive in this environment are going to be poised for a breakout once things return to normal. So I'll try and find that article for you guys. The short answer is I think now is a great time to start a business, as long as you're going in with open eyes that raising capital is going to be hard. So you got to do stuff the old-fashioned way, which is bootstrap, build something that adds tremendous value, and that is scalable and repeatable.
So Mark, it sounds like you're saying if somebody can start a business now in this crazy environment, in this hard environment, that you think that's like a good sign that they're going to do really well when money loosens up and people are spending more and credit's back working again. Is that what I'm hearing?
Exactly. Because unfortunately, it's just a result, but the herd is going to be thinned. You were already starting to read pre-COVID-19 that a lot of startups out on the West Coast were starting to do layoffs. Certainly, if you read anything about SoftBank's portfolio, just a recurring theme of companies that have been funded that probably shouldn't have been funded. Even at scale, their unit economics were not working, meaning they were losing tons of money. But just being thrown hundreds of millions of dollars. As the tide goes out, and a lot of those fundamentally failed business models break, I think there's going to be an opportunity for good business models to attract even more attention than they would have in a crowded field.
Yeah, I like that. What's that quote? When the tide goes out, everybody. Yeah, I think you said it right. Anyways, okay, next question from Mustafa. How will the early venture landscape look post-COVID?
Hey guys, anyone else having trouble hearing David?
Oh, sorry. How about now?
There we go. There you go.
Okay, how will the early venture landscape look post-COVID?
Yeah, it's hard to say, but I think you're going to see, similar to 08, 09, I think they dry up in terms of funding. I think even pre-COVID, we were entering, again, that's been proven out by all these businesses that are just getting insane valuations that have been failing at magnificent scale. My opinion, a company should not be able to raise $300, $400, $500 million unless it has a proven viable business model. And so I think you're seeing that pullback start pre-COVID. It's going to accelerate under COVID. You're reading about, like WeWork right now and SoftBank kind of waffling on their commitment to the additional $3 billion in financing. You're seeing kind of the bailouts drying up. So the good news is, depending on the duration of the COVID effect, I think the economy was still structurally pretty healthy, and there's a lot of cash that is kind of the reason, the driver behind the bubble, the startup bubble, so to speak. So I think cash will look to go back into the market. It's going to be really conservative right now and probably want to be on the sideline. But I think when we get past this thing or close to getting past it, the cash is going to want to get back into the game. So I think you're going to still be able to raise capital on the other side of this. Again, it just goes back to, are you operating leanly? Are you proving a viable business? Are you having 100+ customer conversations to prove that you have a viable product. And if so, then it's the same feedback that holds true in a good economy that holds true in a bad economy. I think those are the things you have to do to build a startup. But I'm bullish, as mentioned at the start. We announced a couple weeks ago we're selling Rocket Fiber. We'll close on that transaction sometime in May, and I'm actually going to be starting something new as soon as I can. Probably take a month off to recharge the batteries, but I think now is the time for people that believe in themselves, believe in an idea to go build it.
I like that. You're not just. Oh, go ahead, Chops.
No, I think he's absolutely right. I think, going back to like what you were about to say, it's crazy to see like all these amazing founders doing a second time startup right now. But in terms of like kind of what Mark was mentioning earlier, in the .com bubble, you saw Google, Salesforce, and all these big companies come out. And in the 2008 crash, we saw, Instagram, Lyft, Uber, Airbnb, all these great companies come out of the bubble as well. And there's actually a lot of funds there just raised. I think there's a few funds right now. They just raised 200+ million to invest in companies in the downturn, because you'll see amazing companies who are at 40 million valuation. You get their valuation cut in half from 40 million to 20 million. And there are a lot of great companies taking advantage and investing in that. At Techstars, I'm personally investing in quality of life startups right now with Techstars. So you see all these big accelerators still investing in companies. So take advantage of that. You will see some slowdown in terms of early stage investment, because you will see a lot of angel investors pull back the money. But if you're a company that's cash flow positive, it's going to be harder to raise money, but there is going to be money on the other side. And this is an amazing time to start right now.
I think post-COVID, I think even now, I'm trying to get my own financial situation, make sure that that's okay and make sure that's looking good. And then I'm really going to be looking, to start deploying capital. And Mark, I think you were talking about, maybe the valuations coming down as capital is more scarce and there's less people deploying. So I think early stage, there'll be like kind of a balance where there'll probably be less people deploying capital, and probably some wealthy people will no longer be wealthy because they were levered up, during the good times, and they're done. And some people will be scared. But a lot of people that I talk to, they're looking for opportunities. They're looking for deals. They're looking for lower valuations on assets. They're also looking at interest rates being at 0% and saying, hey, this is a great time to borrow money and to deploy that. So I'd be interested to look at what happened in 2008 and to see if the early stage investing increased prior to the rest of the economy. I have a feeling that it did. And maybe it might be interesting on how to measure that, even like percent. If the total dollars raised went down, but or valuations went down, 20%, but money raised in relation to that went up relatively. I'm not explaining it well.
What you're saying is saturation, right? Is more money flowing to the good startups? Are we seeing more saturation of that capital being deployed into the viable companies versus more broadly at extreme valuations across any idea that's out there? That's what I heard.
Yeah.
I'm curious if we can dive into that on Friday with our investors coming on board. They've navigated a couple .com bubbles.
I like that, Amanda. Okay, here we go. We're going to do the last question from CJ. How much can local business evolve with COVID-19's impact?
Yeah, it's a great question. So I guess it depends on what you're doing, but take the restaurant business, for example. We're seeing a lot of restaurants staying open, doing carry out. Unfortunately, had to lay off large amounts of their staff. That's pretty universal. That goes back to cash management and making sure that, the business doesn't go out of business. It sucks to ever have to be somebody that lays off people that you care about, your employees. But in doing so, you're preserving potentially a job for them on the other side of this thing. So making those hard decisions. But I think it's reinventing, whether it's your distribution, if you will. That's essentially what we're talking about with restaurants. Trying to, leverage what makes you uniquely valuable in a local economy. I just tell you right now, it is very hard to get any kinds of goods or services to a person's home. So if you're able to do that, depending on what you're selling or producing, I think there's a value add there. I think we should keep an eye on what's going on at Amazon. I saw an article this morning. There's a rumor that Amazon employees potentially going to organize around a strike due to their concerns around the way that Amazon has or has not protected them in their warehouse facilities. So I think, again, it depends on what you do, but the opportunity is going to be there if we seize it. Obviously, you should do it in a safe manner, not do anything that puts you or any of your employees at risk. But I'm sure there's different things that can happen out there. And I also am seeing a tremendous amount of goodwill being put out there to support local businesses. I saw a website, I forget the URL the other day, but it was essentially a website for Detroit-based retailers. So any retail establishment in the city of Detroit, it was like a GoFundMe donation type campaign for those retailers to help them stay afloat. And then I've also seen some really creative stuff. I get my hair cut at the Social Grooming Club in Midtown. Great company. Love those guys. They launched a apparel line. They've never sold clothing to my knowledge, but they launched an apparel line on behalf of their employees, where all the funds go to supporting all the barbers that are now out of work. And so that's something I'm gonna buy one of their hats just because I want to support them. I think they got a cool brand. So thinking creatively like that, outside the box, to again alleviate the cash crunch that we're all going to be facing here.
Yeah, you're absolutely right. Just to add on that, there's another portfolio company that we invested in. They come and do yard work at people's house, to-do-ly, and now they're selling bread to survive this, right? And they're doing pretty good, and they're in Chicago right now, the TechStars Accelerator program, and they just pivoted to selling bread. So whatever I think right now it's like Warren Buffett's rule, right? Like survival is like the #1 rule, and #2 is make sure you don't forget rule #1. So you got to do whatever you can to bring in the cash and to survive, and you got to just reevaluate what your customers want right now. If they don't want yard work, maybe they want bread. So just keep that in mind.
I like that, Top. So you're saying like be responsive to the market, look for those opportunities. Yeah. Okay. Well, hey, everyone, thanks for being here. Thanks for your questions. Can everybody get on your computers and do a little clap for Marc for being with us?
There we go. Thank you, guys. Thank you, everybody. It is awesome to spend an hour with you guys. Hope you got some value out of it. Anyone that has any follow-up questions, anything I can help with, I'll put my email here. It's just marc@bamboodetroit.com. Happy to answer any questions or be of any help I can. We all got to stick together right now. I think that's the important thing. As soon as everyone starts going at every man or woman for themselves, that's when we're going to end up in trouble. So stick together, keep our heads, and see the opportunity that is in front of us, because there's definitely opportunities all the way around.